we're super excited about this next panel. So obviously, as a startup company, you go through this process of meeting really, really smart investors. And VTS and Hightower, we're lucky enough to have some of the best venture investors in the world, legitimately. And we're so excited to have them here today. So please welcome Scott Maxwell, Jeremy Levine, and Jeff Horing.
Thanks, bud.
All right. Everybody have waters? You good?
I wanted this.
Awesome.
That's why I got in front of me.
All right, so I'm going to let these gentlemen introduce themselves. But full disclosure, all of their firms are investors in VTS. Not all these gentlemen are on the board. These are actually the general partners and the founders of those firms. So they're the ones who ultimately make the decision after we go through about 50 meetings to get to them, which is always a really, really fun process. Thank you, guys. And are really, really impressive and have done some unbelievable transactions of lots of large companies that you guys use every day. Yelp, LinkedIn, these are the investors. So I'm going to let them introduce themselves, starting with Jeremy.
Yeah, we got flipped. So I'm Jeremy, and I did not found Bessemer Venture Partners. It started in 1911, a little bit before
He looks good for his age. He looks like he did.
Yeah, so I've been doing this for about 17 years. A lot of my investing is in consumer internet, companies like Yelp and LinkedIn and Pinterest that you may have heard of. But actually, many of the best returning investments for us have been in business software, focused on specific verticals, of which obviously VTS is one. We've done a few other things in commercial real estate as well. One of our investments is 42 Floors. Generally invest at the pretty early stages and try to support a company all through its life. And we're thrilled to be here.
Thanks.
Simple introduction. I am the founder at Insight, which is a venture fund focused exclusively on software investments. We do a fair amount of investing in the enterprise space as well, and in and around real estate. We are also big believers. I think Nick's definition of great investors is the ones who backed him, so
yeah.
Appreciate the compliment. But we're big fans of what the guys are doing here at VTS, but we also see a huge opportunity in your industry as technology becomes more prevalent and more impactful.
And I'm Scott Maxwell from OpenView Venture Partners. I do what Jeff does, only better.
That's true.
And my most notable investment ever, that's my favorite investment, is a company called VTS.
Full disclosure again, the only thing more incestual than real estate is venture capital. So these guys have all either worked for or with each other at some point in time. On that point, this is really going to be an open conversation. So as we kind of talk about things, just feel free to kind of give your opinion or your point of view. I'm not going to go kind of down the line. Just starting from the top as to why we're here. I showed a chart yesterday that showed they think there's going to be about $2 billion or $2+ billion poured into our space this year. It's an assumption, but just based on where we're going quarter over quarter. The only other industry that I could think of that's had kind of that much venture capital in that short period of time that's relevant to us is probably fintech or finance. Why is the space so interesting to the venture capital world now? At least what's piqued your interest as you guys have done your research and diligence?
I guess from our side, a couple things are good trends. First of all, obviously real estate's a massive market. So I think when we kind of look at VTS and some other companies that we've invested in the real estate category, you just see the sheer size and scale of what you guys are working around. And I think the inefficiency in that market is rather profound. There's some themes that I think absolutely resonate well with real estate that make it sort of ripe for some more workflow automation and more tools for you guys. I think big data certainly is a great theme that a lot of you guys are probably focused on. I think mobile certainly helps a lot as you think about automating a lot of the workforce folks that work with you guys. So I think you add all that up and then look at video and virtual reality as a way of experiencing real estate without actually having to actually walk into a building could be really impactful.
Mm-hmm.
I'll add to that. Historically, the big industries that adopted technology first were the industries that had to. Industries like the airlines. You just can't operate the complexity of an airline without tech. And so they built these massive IT staffs to deal with the complexity of the technology and the fact that none of it worked all that well. So they spent a lot of money to make it work. Real estate hasn't been plagued by that. You could build a great real estate business without technology, but what's happening or what's changing is that finally, sort of the software experts are building highly specific, perfectly tailored software for different verticals. And so Nick alluded to financial services where it's been happening for a bit longer, but finally now there's actually great software that will help you run a real estate business that doesn't require you to have a big complex IT staff to configure it, set it up, customize it. You can use it almost out of the box. And so one of our theories as investors is that we're going to see more and more of this highly verticalized software that just perfectly suits the needs of customers. It almost obviates the need for sort of really fancy high-end IT. And as a result, the ROI is much, much higher. You don't have to spend nearly as much money to make it work. And as Jeff said, real estate's such a big category, we're excited about it as one of the big potentials.
And I would add, finally, you're buying it. So we invest in the companies that are selling it and looking for companies that are growing. And the industry is really picking up in terms of purchasing and adopting technology. I think partly for what Jeremy says, and partly it's starting to go through a change over the last few years.
Yeah, and I think, Jeremy, to your point yesterday, there was a panel with five CIOs, so Chief Information Officers, of some of the largest REITs in the country. And the conversation 3 years ago was very different. It was, well, do we build or buy? And I think there were still a lot of people who wanted to build. And yesterday's conversation was very much, one gentleman's remarks was, well, if we build it, well, then we own it. We don't want to own it. So you can tell that there's been a pretty large shift in people having real success with kind of out-of-the-box software that's just clearly bespoke to their product type. So that's been a big shift for us, which is amazing. And I think you guys have seen that in other categories, so that's huge. So on that topic, I mean, outside of financial services, I mean, what other industries have you guys seen that have gone through a shift like this in more the B2B space? I know there's a lot of vertical software out there, but I really want people to hear just stories about other industries that have gone through this kind of transformation, and the output has been, something successful.
Almost all of them.
Yeah, I think Jeremy said it really has been a phase. I think it's two parts to what Jeremy said. Some industries necessitated it. I think also what's going on in real estate has happened in other industries like insurance over the years. You guys are actually changing. I think this is a lot more of an institutional crowd than it might have been 10 years ago or 20 years ago. So it's a relatively young institutional marketplace where the assets have consolidated across a much smaller subset of investors, which have more resources, and like anyone else with resources, you want to make yourselves more productive. And I think that kind of parallels some other industries that we've seen over the years. Healthcare is a good example that's over the years gone from very small individual practitioners to bigger practices and bigger delivery services, and the same sort of technology tends to follow those consolidation trends.
So let's switch gears just a little bit. So our audience is probably 90% investors, asset managers, things like that, 10% brokers. So for them, they're really focused on, similar to you, where should we be focusing on? Where's our next customer coming from? Given what's happening in the world, there's all this change, every industry is transforming. We want to start looking for the tenant that's going to go from 5,000 feet today to 100 in 3 years. Similar to you, except you're looking for ARR growth, right? Given what's happening in the world, what kinds of themes? I know Bessemer's a very kind of theme-oriented investment thesis, which is where are we kind of focused thematically this year. What areas are interesting? There's a lot of stuff happening, so I think they'd love to hear where you're focused so that they can start thinking about those same sectors.
Well, I'll tell you what I tell my kids. I think there's three great places to work, and I think all three are going to be increasing in jobs, which means they need to be somewhere. Tech, info tech, which is where we are, biotech, and energy. And I think all three of those are going to have, or continue to have, pretty large increases in staffing, and therefore need a place to be.
Mm-hmm.
I'll give you one sort of mundane example and one kind of crazy one. And it depends a bit on your time frame. Like some of these will take 15 years to emerge, and so it may not make a lot of sense in the real estate business.
Long-term leases.
Fair enough. But one of them is the race for space. So we've been investing a lot. It used to cost hundreds of millions or even billions of dollars to get a big honking satellite that was the size of a Mack truck into space and had to last for 25 years. Now you can shoot a satellite up into space that's the size of this water bottle, and it lasts for a couple of years, and then it degrades and falls back into basically the Earth's atmosphere and burns up, and they're almost disposable. And we're seeing the pace at which these things get launched increase really quickly, and therefore the number of companies that are doing stuff like this is going to explode. And many of them will grow into big companies, many of them won't. But it's sort of a bit of an out there area that we're spending a lot of time focusing on. And then the second one, which is a bit more mundane, is the idea that people know, and this actually impacts real estate in multiple ways. Historically, people would have to kind of show up in the office to go to work. And so companies had to build offices that accommodated a bunch of people. Increasingly, you can do work remotely and even as a freelancer or a stringer. And there's a whole class of marketplace businesses popping up where you don't actually have to work for the company, but you can do work for the company. And so on the one hand, that's bad for real estate because it means that people coming to a big office may be slightly less common in the future. On the other hand, there are these companies that are building and maintaining these marketplaces that can be really large businesses over time.
I guess I'm going to answer that in a slightly different way instead of trends, and maybe even counter Jeremy's point a little bit on that. I think I see a huge demand from the millennials of driving back to the cities, and even some micro cities that you'll see popping up in areas that were very rural around it. And I'm not a real estate speculator, but if I were to kind of put my own money behind real estate, and I actually put a little bit in one of those cities, Austin, it just strikes me that these cities are going to continue to be very long-term magnets, specific ones in particular, for the knowledge-based workers and the millennials today that are looking for jobs. But I think, in my mind, I can't imagine starting a company today in middle New Jersey, as an example, where half the pharmacy companies today are located. Like, we could never build a tech business in middle New Jersey. Could we build it in Jersey City? Sure. But you couldn't go very far out of New York City if you were to have an office in a technology business today. And I suspect that's true for these guys, and whether it's Boston, San Francisco, but even some smaller cities. We've looked at things in Nashville and Pittsburgh, et cetera. So for me, the trend is probably more urbanization of a lot of the high-paying jobs and a lot of the young folks that want to move to those cities over time.
Yeah, I think one thing that we've seen that's just kind of a trend is retail, obviously, with e-commerce, what's happening has been an interesting sector to watch. We're seeing while the kind of big box folks are leaving, you're seeing a lot of the tech companies now want kind of brick and mortar stores, but more as showrooms. Mm-hmm. So their strategies are totally different. So it's almost like the sector's changing, retail's not going away, but it's just a very different retail. So I think you're going to see that on the opposite side. It sounds like that was your comment on just how people work might change. They obviously still need office space, but it might look a lot different. Yeah, I mean, we had someone yesterday tell us that, because we're going through this exercise of looking at how, when all these transitions happen, like what happens to jobs. And Intercontinental Tires, I guess they have 12,000 engineers now, software engineers, because it's all about autonomous driving. They want to have sensors on the tires, and that's a massive shift, right, in the industry. Yeah. So and I think that's a relevant topic for this audience. As we think about things that could disrupt or change our industry, autonomous driving is probably the number one thing. The idea that, and we've all talked about it, the idea that you won't need a parking garage, in the middle of a city, and we've got lots of them, changes the landscape of the real estate. So I guess for you, I know it's not so much of a hot topic as it was 3 years ago in VC because it's getting more mature, but when do we think that's going to be a reality? When do we think driverless cars are going to be mainstream and really in the market? And how does that impact what you guys do?
Well, a lot of times when I'm in a New York City cab, I feel like it's a driverless car, so I guess I'd say now.
He's a Bostonian, just so you know.
Seriously, so there's a lot of money going into it. There's a lot of very smart people that are working on it. There's a lot of fundamental problems that have to get overcome, and it's really difficult to say when those get overcome. I suspect that the easier self-driving path is going to be when things are predictable. So it's interesting that Tesla is moving over to self-driving trucks. It's probably easier for you to create a self-driving truck because the highway is a little bit more normal than driving around the city. But I suspect that the trend is going to keep going in that direction, and maybe there's a moment where it switches over. I suspect it's just going to be more of a natural shift from the Ubers and the Lyfts to somebody not holding onto the wheel of an Uber to a Lyft, somebody not appearing there at some point. as an engineer, I tend to think that nobody driving anything without a wheel point is a lot further off than a lot of people in the industry.
Yeah, I mean, are you seeing, or any of you seeing, kind of other micro companies out in the space, launching products to assist that future product? Are you seeing different companies who are either doing some kind of mapping technology or sensors that are just kind of specifically geared towards that shift when it does happen? Is that still in the market?
Oh yeah. On the sensor side, for sure. I mean, everyone wants to provide the data for it, but I'm not sure how it's kind of hard to connect the dots there.
Seem pretty bearish on the...
I'm pretty bearish on it. I'm not an engineer like Scott is, but I think it's going to be longer than we all think.
Yeah.
Well, they say that we all overestimate the speed in the short term and underestimate the impact in the long term. But I have a 5-year-old, a 7-year-old, and a 9-year-old kid, and I don't think any of them is ever going to learn to drive.
Yeah.
Is that for Uber or for self-driving cars?
Because his dad can't teach him.
I tend to agree with that.
But from this audience's standpoint, I've got to say, I think that there is a movement away from fewer cars per person, and I think that that ratio is going to continue to move in that direction. Whether it goes to zero, I don't know. I doubt it goes to zero.
Yeah, but I think you're going to, operators of real estate will go from selling parking spaces to selling electricity, because it'll be where the car goes to charge back up, and whether it's a self-driving car that then goes back to work or the driver switch and it's another person going in, but we're just not going to need nearly the number of parking spaces we have in cities. Yeah,
I mean, local government's going to have to get involved, and there's going to be a lot of infrastructure changes that have to be made, I'm sure, to make this really work. So I agree, I think we're longer than we think, but I think when it does happen, the shift happens quickly. So, I mean, on that topic of what's going to help, I mean, the technology behind that is obviously really, really complex. And, we're in a space where, we talked about this yesterday, the notion of big data, we like to say the word as a buzzword, doesn't really exist yet. I think we're accumulating it, and over the next couple of years, we'll have an opportunity to really start to mine it. But AI and machine learning are things that really don't exist for us. So I think talking a little bit about the impacts of those in other spaces that you invest in or companies you invest in would be really interesting for the audience, because it is such a new thing for them to start thinking about. So are there any companies that you guys have recently invested in or are looking at that are using machine learning to do some spectacular stuff that we should start to think about?
We have a lot. I mean, we think this is one of the biggest areas of impact. So, security is a big area. Anywhere where it's easy to collect lots of data. Real estate data points aren't necessarily as massive as some other industries, but it could be big enough that you could start to get real insights on it. But I'd say we have 24 investments that are directly leveraging large data sets to make better and more interesting predictions.
Yeah, and I'd actually take it a step further and connect it to the first question you asked. And so when you build a horizontal software like Salesforce used in so many industries, it's hard to process the data and create interesting insights because your customers are also different. But when you have software focused on one specific industry, you can mine the data in a much more effective way. And so, and this will play out, I'm sure, with VTS. And so as an example, I'm an investor, actually I'm on the board of a company called Shopify. Shopify lets you create an e-commerce store. They have hundreds of thousands of customers, and they use their software to run e-commerce stores. And Shopify can now see the patterns of the data and predict, like, okay, this customer, this store just sold its second product. And when 85% of other stores sold their second product, the return they get when they start doing some Google advertising goes really high. And so they'll start to prompt the store owner to say, now's a really good time to turn on this Google advertising campaign. Or they'll take it a step further and they'll just turn on the campaign for the customer and almost self-operate the store. And that's all done by mining massive amounts of data to see what happened with 50 other thousand stores that went through the same process. And so you can imagine with the VTS software, it'll be like, hey, this tenant or prospective tenant just took the following actions that look really similar to this pattern across thousands of others. Now's a really good time to call them and to say, can we go visit the space again? Or, where's the turn of the lease? Or
totally.
And so it starts to automate things in really subtle little ways that don't necessarily feel like, oh, there's some massive data analytics happening here, but that's in fact what's behind it.
Mm-hmm.
Yeah, I mean, if I were to just try to add in a different way to what these guys said, I think that there's, in your industry, two really good points to try to apply. I mean, big data, machine learning, in total, all it is there's something that's got a lot of information that's offering advice or doing something for you. But the 2 points that seem to me to be really important points is post making an investment, how do you maximize the value of what you got? I happen to think, I voted with my money, I happen to think what VTS is doing, and clearly most of you probably do, it's a really good point to try to maximize what you got. If I was a customer of VTS, I would be pushing them to put more and more and more in it to try to get more and more and more yield out of what I was doing, and I actually think big data and AI are some really good components of it. But probably, at least equally importantly, and currently just because prices are so high, really importantly, the front end, finding and trying to parse through things that are available is an awesome place to put the same thing. I don't have a company example, but I will give you a personal example. When I started OpenView, big issue there is I had been at a public asset management firm and then actually worked with Jeff at Insight. That's why I like making so much fun of him. But when I started OpenView, the big issue is if you're a public asset manager and you want to buy something, you do this. And if you want to sell something, you do this. And there's a bunch of information that somebody else, Bloomberg, as an example, has gathered for you. When you're a VC, there's thousands of new companies cropping up every year and existing ones that may have morphed into something. And how do you narrow those down to a small enough group that you can actually put some human activity against? And so what we did was we actually started our own internal effort to try to sort that out. And that's a big data machine learning problem, to try to get a narrower set that are worthwhile to put human activity against. I suspect if you, and I called it Bloomberg for the VC, and other firms have been doing various aspects of it as well. If I were a real estate investor, I'd be spending some time trying to sort that out probably as well.
Yeah, I would totally agree with Scott. You guys have a huge opportunity. Your business is about predicting the future demand for space, and that's basically a demographic and sort of income sort of forecasting. And a lot of that is trends. I mean, we all wish we bought New York City real estate 15 years ago. Probably was, in hindsight, a lot more obvious. But was that a trend that was obvious? It seems to me there could have been a lot of big data points to suggest that it was. So I think your ability to predict the future is going to be determined by how well you can process your data.
Yeah, I think, so I mentioned to the folks here, we had Billy Bean yesterday, and what I was amazed at was the kinds of metadata that he was looking at was far beyond like batting average. It was, if someone struck out, where did the ball go, and how many times did that actually happen? Yeah. And that's the level of detail, and if you think about our space, I mean, we track such high-level information, and we don't do it well, right? Every single person here has a different way of looking at net effective rents. I mean, trust me, we know we're trying to build it all for you. And there's all this metadata that we don't track, right? Ceiling heights across the industry, that's not a standard standard piece of data that we collect and can then say, well, tenants like this really love space that looks exactly like this because we don't have enough metadata. So I think that's a really great lesson for us all to learn and take back is we need to collect more data, right? And we can help with that, but I think just going back to our office on Monday and realizing that, okay, driving adoption helps us in lots of ways. It helps us, one, improve our workflow, but two, it's setting us up for the future because we believe that data is going to be your most valuable asset. So really interesting stuff.
Yeah, I would also add that when there are companies who are further along with technology and therefore the lives of their employees, their customers are better, they tend to be more attractive to employees and customers. So eliminating crap work, great way to get employees that are really smart and don't want to do crap work. It's also putting more technologies into your buildings to make the lives of tenants easier. You can get some level of brand that way and attract tenants. But these opportunities are for data and trying to sort out what are the important data points that predict things is really important. And we're very similar to you in that way from an investor perspective. It's a different asset class we're investing in, but same problem.
Mm-hmm. So but I want to open it up for questions in a minute, but before we do that, so you've got lots of great investors like yourselves who are really trying to stay ahead of different trends and look for the next tenant. I mean, but also change their organizations, right? The concept of this conference is accelerate change, and do it now before it's too late. I mean, any takeaways for them as they start to go back and think about how do we on Monday go to our bosses or our partners and say, we need to start thinking about these 3 things or start to change these 3 things to really stay competitive from a venture standpoint.
In the real estate world or in the?
Just even organizationally, right? Remove real estate, just, this is an industry that has not changed. I mean, literally, we always say the biggest disruption has been kind of fax to email. It's probably like our biggest change so far. We're hopefully helping shift that, but there's a lot to do, and they know that.
I mean, so we're often investing in very early stage, risky startups, and they're at the forefront of accepting and adopting and driving change, arguably more so than most. And one thing that they do really well, at least the good ones, is just massive amounts of experimentation. And so, they're small businesses and they kind of bet their entire company in experiments constantly. I don't think that is necessarily a smart strategy for someone with a sizable real estate portfolio. But embracing the idea of taking relatively small amounts of resources, small amounts of budget, and trying something with the expectation that it's probably going to fail, but if it works, it can pay off really handsomely. That basic mentality is critical. And so I think without it, if you're always worrying about if this doesn't work, it's a disaster, you never try anything. But if you're willing to accept that of the 9 things you might try, 2 of them might work out really well, 1 of them might be okay, and 6 of them you're going to write off, like that's the way you end up accelerating change. Yeah. But you have to think about it from a portfolio perspective.
Yeah, don't put it through compliance. It never works.
So I learned something from Scott when he was working with me, which is ask the question why. And Scott used to ask constantly, why? Why do we do it this way? Why is it this way? And, if you kind of marry that with some, just sort of awareness of what can be done, especially with technology now, you might find yourself surprised by some of the answers, and you might realize that a lot of the things that you accept as sort of established business practice were established for reasons that have really very little relevance in a world where, you have a supercomputer in your hand and can really, make things much more efficient, much more productive, much more sort of intelligent.
Yeah, from a change management perspective, my argument would be if you were responsible for the people and the budget in your organization, you've got an easier point, and that is my advice would be to set aside some budget and either hire or assign some people to trying to figure out where's our world going, or how can we make it go in a place that is better, and using kind of Jeremy's idea of experimenting is super good idea. If you aren't that person, it's a lot harder, but you still have some degrees of freedom to be able to do things. If you can convince your boss to try X, Y, Z, and you can get to the point of accepting what X, Y, Z is, I'll go into that in a second, then you stand a chance of actually being able to do something that has positive ROI that then you get the opportunity again to go back and say, see how good did with X, Y, Z, I think we should try this next. And that is a matter of, trying to figure out what your running room is to be able to do something, and then trying to get super smart on what you're doing and what your group is doing, and what's out there that might be able to help you either from other firms in your industry or by talking to a lot of vendors, and vendors want to talk to you, so if you want to spend some time doing that, I would recommend you do. Then what you can do is you can prioritize and really try to figure out, look, what would be something that would be really immediate, that doesn't take a lot of people to change, that we might be able to put in place that will have some short-term ROI. And if you can get on that train, you potentially can open up more and more and more budget to innovate. And from my perspective, the firms that innovate are going to be ultimately the winners, and the firms that don't it's going to move from, right now, technology in your industry is a competitive advantage if you use the right stuff the right way, and it's a competitive disadvantage if you don't. But over time, the industry is going to move to a point where if you don't use technology, you're likely to be out of business, I suspect. And in the process, you're going to get companies like your next speaker from WeWork that are completely redesigning the business model and attacking it from a really unique and brilliant way. You can learn from them as well. So that would be my 2 cents.
Yeah, and in this, as a software company at VTS, we do agile development, right? That means that, one, it's never complete, but it's a fail-fast strategy. That doesn't mean build as much as you can and then fail. It means build something light, test it. If it doesn't work, it didn't cost us that much money, right? That's okay. So I think, to their point, trying out softwares in an agile way is a really great way for everybody to start, and having a team dedicated to it. I mean, everyone here is really, really busy. One of the, I think, inspiring things for us yesterday, at least for me, was hearing the partnership now between the business teams and what used to be IT teams are really now the technical teams of your companies. We're seeing companies hire CTOs instead of CIOs, or they're changing their titles because they realize that that person is strategic to our company now. We showed the stat yesterday that said Goldman Sachs has 9,000 engineers. That doesn't sound like an investment bank to me. It sounds like a technology company. And that's where I think we're all saying this is going. So from there, I want to open it up for questions. We have a microphone being passed around. Awesome. So who wants to go first?
Thanks. Hey, since you mentioned self-driving cars, can you talk a bit more about what you think the rise of self-driving cars means for the real estate industry? I mean, is it going to have any big impact on real estate values, on what it means to be a landlord, on what kind of space is in demand, what kind of towns or neighborhoods are in demand, or do you think it's not going to be a big deal for real estate? If you have
I guess, parking is the biggest impact that I can immediately think of, right? Why would you need to park? Huge parking lot facilities if, your car is coming to pick you up every day. There's so much uncertainty to me in that I personally would not spend a lot of time if I were in the real estate market worrying about that trend. I think e-commerce and Amazon is a far bigger alarming concern if I were sitting in your shoes, or maybe the WeWork's phenomena of sort of loosely assembled workforce. Thinking about what millennials are going to do tomorrow, those are things that I would be sort of giving a lot of thought to. I don't think the self-driving car has enough certainty around it or enough likely impact that it should be your priority concern.
Yeah, I think if you're a developer and you're developing buildings right now, you're probably going to develop them to today's needs, and today's needs better than others. But I have noticed fewer parking spots in some of the newer buildings in Boston. So that's how people are reacting. I don't have anything pithy though in terms of what the effect is going to be beyond that either.
I'll disagree with Jeff on one point, which is, I think he's right. It's not clear what the timeline is. The problem is the minute it's clear, the value of all that parking goes to zero really fast, or something close to zero. And so you wait 1 second too long and you're toast. Better to sort of get rid of those assets or think about the plans to repurpose them way before it becomes obvious. I bet it's going to happen sooner than he'd bet. Neither one of us knows. But once it happens, it's too late.
Well, yeah, so let's develop that idea then. So you have a self-driving car, why isn't it a self-driving office? And if you have a self-driving office, does that mean you can live further out in the suburbs to get into the city, or does it mean you can live in the city and work out in the suburbs because it doesn't matter, it feels like a conference room? I don't know. I suspect there will be some change of patterns with it, but boy, it's really difficult to figure out the direction of them.
Yeah, one thing we've heard is we're hearing developers, if they are in the parking garage industry, they're building them in a way where it can pretty easily be converted to office, right? So ceiling heights might be higher. There's just, the framework looks a little bit different than the modern parking garage, just kind of in preparation for whether it's 5 years or 10 years, we're okay.
Yeah.
Which I thought was interesting. So, another question.
Yeah, they just keep
traffic jam getting to the office.
Just wanted to get your guys' thoughts on commercial real estate as an industry. It's pretty disparate, non-standardized, pretty nuanced. How do you go about doing the diligence on real estate tech companies and differentiating different vendors?
We talk to people like you. Because what we're trying to do when we invest in a company is we're trying to understand that company from the perspective of the market. And so we call ourselves expansion stage investors, which means the company already has customers. So we talked to them, and the best people we talked to have evaluated a bunch of options and are relatively articulate about where they sit in the industry and whether they're more normal, I mean normal in a statistical sense, or are they more outliers? And what we're really trying to do is trying to figure out, okay, is this market big enough? And I mean, it's a huge market, so even if it's a segment of the market, it's usually big enough. Does that answer your question?
Yeah, I think for established companies, but what about like some companies that it's more early seed, how do you kind of make the assessment?
So we do a lot of similar things, but the data is much less clear. And so for my earlier comments, we, when it's much riskier and much less clear, but we still think there's a really compelling founder attacking a really large problem, we'll make a smaller bet. And then as the bet starts to work, and as the customers who said, yeah, I might consider buying that, actually start buying it, we'll invest more money to help support it more down the road. So we're trying to predict the future a little bit, but mostly we're watching the data as it comes in, and then adding more to the ones that are working.
Yeah, and I can tell you firsthand, per Scott's comment, talking to people like you, I'll never forget, I think we gave you like 5 references when you did our round, and somehow within a week you would talk to 75 people, and we were like, I don't even know 75 people. And they're really good at connecting. Who else can I talk to? And then they had 400 pages of notes, and we're like, wow, that was interesting.
There were way more than 4 pages than notes.
Yeah.
You saw.
No, it was 400 pages. Yeah.
Oh, 400.
It was pretty unbelievable. So they are really good at diligence.
Yeah, but I mean, so just extend that idea. That what I would argue is you guys actually control the industry. So, if you are interested in having more technology, then the industry is going to produce more technology because you'll buy some, and then people like us are going to say, oh, it looks like it's time. Let's speed the company so they can develop better stuff so that the industry can have more. And that's typical of industries. Usually what happens is that there's some leading edge people that work in companies that may or may not be leading edge, but they have enough running room that they can do something that turns out to be really quite beneficial to the business, which generally means it either increases revenue or reduces cost. But sometimes it's a competitive advantage thing where, hey, all of a sudden we're more attractive to everybody. And then that company starts doing better and other companies try to start copying it. And the ones that do better faster, it's harder for the people to catch up. And ultimately, though, the industry ends up with roughly the right level of technology and the right type of technology from those types of mechanisms. And I would argue that right now, this industry is has a lot of opportunity to improve its technology addition to its resources.
Awesome.
I argue that about all industries, by the way. I think it's this industry in particular is probably one of the, 10 or so that have serious opportunities.
So guys, one question for you. So while Alessandro's bringing one out, yesterday we talked a lot about a big component of yesterday's conversation was about future-proofing your business, right? We're in a time of great change across industry, across commercial real estate. There are technology trends that are affecting many different things outside and inside the industry. Stepping back and kind of thinking about commercial real estate, and in this room we've got 3 billion square feet of ownership, and they own some of the largest office and industrial complexes and retail complexes in the world. What do you see as the technology trends or themes that are the most disruptive to kind of current status quo way of life in the kind of the built environment commercial real estate over say the next 10 years? What's the most disruptive that we should be thinking about, this industry should be thinking about from a technology change agent standpoint?
I would go with the two, I think to me the two big things are, one is big data, which we talked about, and the other is this thing in your hand called a phone, a phone which is a supercomputer. So we looked at statistics, I think 70% of all Americans don't have a work email account. If you think about the average worker, they just have no reason, they're not in front of a terminal, they're not in front of a computer. That's all changed in the last 7 years. So every one of your employees now, or your employees' your investment employees have basically a computer in their hand every day. And the ability to impact work process around that is tremendous.
I would probably state the obvious, but I think it's climate change. I think if I had a long-term asset, it's all about climate change. And my impression is that the real estate values haven't started changing yet. And I suspect that in the next 10 years or so, it's going to be something that you're working into your models a lot more. It's actually striking to me that it hasn't been worked in. I mean, it has little to do with information technology, but there's going to be a lot that's going to have to happen to kind of prepare for it. And there's going to be certain buildings that are, I think, going to deteriorate in value, and others that maybe go up substantially in value because of it. So, and it doesn't necessarily have to be that we're sitting in 4 feet of water in order for that to be a problem. It's when it becomes seriously real, you guys will start working at your models. If I were an investor right now, I'd be working on my models before everybody else and just work it out.
Yeah. It's interesting actually, because the exact timing and impact of that is very difficult to predict.
Yeah.
And same for the self-driving cars. You have these two different forces.
Yeah.
But are you selling your beach house?
Well, that's a really good question. I'm on a lake that's probably about 75 feet above sea level. So.
Smart. Hedging. Yeah. Meanwhile, my house is flooded every weekend. I'm underwater. There was another question back here.
But my time frame and their time frame is a little bit different too.
Right.
I'm 55. I got 45 years left. So it doesn't really matter. It doesn't matter what the terminal value is, does it?
So my question has to do with a recent investment that V16Z made. They invested $65 million in Cadre this week. I don't know if you guys got to look at it, but it's a real estate tech company that just they've only closed 2 deals, and I don't see like their revolutionary technology or what really creates that kind of valuation for that particular company. I don't know if you guys got to look.
Great question.
Some insight into.
Well, isn't it because you guys don't know anything and these guys are so much smarter than you guys that they're going to win?
Was that the pitch?
I assume that's what it is, just like banking too, right? Nobody knows anything about banking, so I'll start a West Coast company that could reinvent banking. I'm a huge bear on all these plays, so I'm fintech for that matter, but you don't want to get me started on this one.
You clearly looked at it. I love it.
I think we do want to get you started.
Yeah, I think so.
What do you mean by that, John?
Well, I actually think that the assumptions that you guys are idiots and that somehow a little bit of technology is going to change the entire real estate industry overnight. I don't think that's the case. So I've got more confidence in this group maintaining their market share than a little bit of tech spiffed up with a bunch of capital. But.
So by the way, I share the view. You're asking the question of the wrong people because none of us invested in it, arguably.
Right.
You did say why not?
Why I'm asking.
But I'll answer you through metaphor, which is that I'll have friends often who come to me and say, hey, like I've been invited. It's a doctor or a dentist or a lawyer or someone who doesn't do what I do professionally, and they say, hey, there's this startup, and I've been invited to invest. And like the first question I say is like, if you've been invited to invest, why do you think? And it's because every professional investor has already said no. And I think there's a horrible natural selection challenge that these marketplaces have. Like, you guys aren't going to be going to some internet marketplace to find out where you're next going to put capital. And so the people who are just didn't have access to the best stuff. And if they can solve that problem and avoid having all the crappy stuff show up on the market, they could have something really valuable. Like that's sort of the New York Stock Exchange is where you go to trade stocks. But it's extremely difficult to do that, and it's highly unlikely to work.
Yeah, they tried it with the second market, right? They tried to do secondary shares,
right,
which worked for one company, Facebook, and then it kind of died.
And then when they went public, that went away, right?
Here's the problem, though. The best companies are companies sometimes that everybody thinks won't work, and because they don't think it will work, there's less capital going into competitors, and there's fewer competitors. Sometimes it's hard to differentiate those from really stupid ideas, right? So there's the brilliant ideas that people think are stupid, and then there's just the stupid ideas. But that's an early stage investment thing where you don't put too much capital in, try to get to a milestone like Jeremy was talking about, see if you've uncovered something that nobody else knows, and if not, shut it down and try to do something else. or sell something.
65 million seems like a pretty big milestone to jump, right?
Yeah, how much is, in fintech, I mean, take aside Lending Club, which went public, but they probably raised billions of dollars to try and compete with credit cards and banks. And
I would argue
it's a perception that's, I don't know, the further you get from New York City, the more confidence you get that New York City doesn't know what they're doing. That's kind of my view.
New Yorkers' view of the world.
It is. That is absolutely New Yorkers' view of the world.
But 65 million seems like a lot to me, but it really depends on whose money it is and kind of what they want to do with it.
Right, and speaking to your comment on the dentist, actually a dentist friend of mine was invited to reinvest in that same company, so looks like they're raising capital from everyone.
Next question. Someone in the back.
Can I just ask a quick question about actually blockchain? Like, do you guys actually see that like specifically entering into the real estate world in general, or just in a general? What's your viewpoint on that and how that's actually going to be?
I don't think we couldn't.
Blockchain. I was asking about blockchain.
Oh, blockchain. Okay.
Yeah.
What do you say?
Blockchain. It's a word that you hear in the real estate world a lot, and
Climate change, self-driving cars, blockchain.
There you go. Yeah.
That would be the order of.
I think I'm probably the
one.
And I could probably find a few more things in between.
I think that's probably something that, I mean, there's a lot of people who are really interested. It looks like a fabulous technology. There's a lot of transactions that maybe get recorded that way, but I think probably less interesting from kind of a front office point of view. I don't think it's going to change the world.
I think you'll have plenty of time to see it coming. And parking lots won't be devalued overnight.
Well, you're all going to have to adopt it if you adopt it. It's not going to be a differentiator from a competitive advantage standpoint.
Yeah.
What do you think, Jeremy?
I mean, I'm a believer that blockchain will have lots of applications, but I can't think of where it's going to come in real estate in the short term, so I don't have a different answer.
Yeah.
Kent?
Title insurance. If you're a title insurance company, maybe you have a problem.
So that actually brings up a good point. So you talked about industries that are expanding and some of the known drivers of change, self-driving cars and things like that. Is there anything that's flying kind of underneath the radar that the real estate community should be aware of? Is there technology being developed in the accounting industry or legal that you see could drive contraction in those markets that we should be concerned of, considering
good question.
They take up a lot of space?
I mean, so I think that I alluded to this before, which is that for certain industries, particularly services industries like that, the need to be in the same physical place is going down. And so you can hear about law firms that now, for all the discovery work, which is sort of the requires massive numbers of arms and legs, they're hiring much cheaper lawyers who live in Pittsburgh instead of filling the fancy office towers in New York City. And they'll either have outsourced operations or their own offices in Pittsburgh where the career track is totally different, the comp is totally different. And so I think that's an example, but this general trend toward, particularly for services that can be done remotely, could have a meaningful effect on real estate.
Yeah, I would agree with that. I think the service industry is going to increasingly see opportunity for technology to create, in effect, outsourced or remote service delivery.
Yeah, Dave from WeWork, I suspect you have a lot of law firm tenants.
Yeah, there's some in there. What about a lot of the stuff that's happening around around automation? And do you see applications for automation in the building industry? I mean, I don't think a lot about the automated worker and what robotics could mean to construction and even cleaning buildings. But then you have really interesting companies that have brought marketplace to building services like Managed by Q. It's where do you see automation and sort of outsourcing as opportunities?
If I can get on an airplane with a boarding pass that's sent to my phone, why can't I get into a building with a pass that's sent to my phone?
That actually is unbelievable. It's so Equinox now has that. It's changed my life that Equinox just has the app where I can go in and go like this, where I agree. I have not seen an office building where it's on my phone and I can literally.
Yeah.
$1 billion idea.
I'm not the most objective guy in the world because this question came from Dave from WeWork, and we just sold WeWork a company. So now we're a small shareholder of WeWork. but I'll answer the question just because it was a gift to me. I think you got to look and see what WeWork's doing, because I think that they have figured out a very unique way of looking at the world of real estate and trying to figure out how to vertically integrate and try to automate everything that you can possibly automate. And I don't know what is public in terms of their plans. Hopefully Dave will tell you, because I'm not. But I think it could have a profoundly positive effect on all of you. Positive effect. Could the original business could have maybe a negative effect on the current business. I think it's going in a really good direction, but it makes total sense. Everybody has a computer in their pockets. It makes total sense for everybody to be connected with the computer. And it makes total sense for any request or any communication for anybody who's moving around to go through that device. And true for real estate, true for companies that are sitting in the real estate, true for the relationship between the two.
But what about like broader automation? Like I got to take a tour of the Tesla factory, and just like watching robots do it all. Like, I mean, what does that mean to like where people live, work? I mean, you guys have opinions on it. I'm not asking you to predict the future, but.
How does more automation affect buildings, commercial buildings generally?
Yeah, and just like the sort of landscape of companies that you're investing in, and whether you're bullish or bearish on it.
Yeah.
One day you'll get in the elevator and there won't be a guy in it. You just push a button and it takes you to the floor automatically.
No. Right along with self-driving cars.
Actually, I live in a New York apartment building that still has a guy pressing the button.
A lever or a button?
It's My perspective is that human density is going up, so there'll be more workers per square foot in every building. Since I'm not completely objective, maybe you follow this advice or not. I would go into a WeWork, go to your closest WeWork and walk around, because I actually think that they've nailed the setup for transitory people as well as people who are more permanently in seats. And there's a lot of technology work that's being done to try to make it so that I don't have to be here and you don't have to be here, but we can all feel like we're here. I suspect that is going to continue to get better, and I suspect that at some point people are going to realize that they like being around other humans and they want to be around other humans, and so they're going to continue to be around other humans, both in the work and in the home, and they seem to like the concentration. More people, as a percentage of the population, live in cities now than used to. I suspect that increases, and I suspect that the density goes up, continues to go up, or at least theoretical density, because there might not necessarily be people there, but at any given point in time. But I don't see people moving away from wanting to be around each other.
Well, we got one more question.
Yeah, sorry, just one more question. So you're seeing a lot of companies that are going to end up needing office space. Do you think there's a change in the advice that you give them on where they work since WeWork has come about? Like, what was it, 5 years ago, you said go see a broker, find some space, it's time to like expand. Is now the most obvious point to say, before you commit to anything like that, go to WeWork?
I would just say for us, WeWork is not an answer for all of our companies based on their size, but we still run a huge issue, a lot of our companies that are growing fast, that they have, renting in, moving and upgrading and finding contiguous space that can accommodate their growth rate is very challenging in dense urban environments, and it requires a lot of rejiggering, removing, et cetera, and the market, to me at least, has not satisfied that demand yet. And so it's really a very inefficient, high friction cost for a 50-person company growing at 100% to accommodate that growth for 3 years, 4 years. And it's either you buy way forward more space than you need, which is obviously highly inefficient, or you end up moving quite a bit.
It's a very sore topic, and the single most common piece of advice we're constantly giving companies is just to fight the term. You'd rather pay a much higher rent and have a much shorter term, because you know that it makes no sense to sign a lease that's going to last 7 years if you're growing your business at 30% a year, let alone 100% a year, which many of these really promising companies are.
5 years from now, I will be telling all my portfolio companies to go to WeWork or something that's just like WeWork, and no matter what the size, I think. Right now, it's probably smaller companies. But that's just because they haven't yet completely perfected the next size.
It's just interesting because we price duration of leases.
That's how we value buildings. So
yeah, I know.
Revenue for over a period of time. Yeah. Yeah. And new accounting principles might change that, right? You know, the laws that go in effect next year, which Dave and I, we don't hear a lot of talk about it, but once these leases start, you know, living on the balance sheet.
Well, you guys might want to think about how you use your scale to create long duration leases, but not necessarily space. Right, so you can create, I did this in our building, I said, all right, we'll commit for a number of years, but we want to know that we can move around a little bit and grab more space. If you had 10 buildings, it's even easier to have that flexibility for a tenant. You can underwrite that risk in some ways. So what people want is the flexibility to know that they can upsize or downsize in some of these more rapidly growing industries. And you know, law firms and other places that you guys have rented to, at least in cities like New York, were probably a little less dynamic in their growth rates than a lot of these companies like VTS even must have a very difficult, you know, lease problem.
Yeah, although that flexibility piece is important, but if you haven't experienced a WeWork, go experience one. I mean,
are you a fan of WeWork?
Well,
Scott likes WeWork.
Okay, so flexible real estate, absolutely key, and they do it in spades. Incredible environment, absolutely key, they do it in spades. But they also have everything else. They're basically taking care of you, all the services.
Yeah.
So why have why have your own people that are trying to figure out the services if you can have somebody taking care of the service? I mean, it's an experience that is absolutely unique and very different than the really antiquated approach that's right now trying to find a broker who's banging on you about all sorts of stuff and brings you to crappy places and then takes weeks to get some sort of proposal that you don't even understand. And that's just the beginning. If you get through that process where you need to get a lawyer associated with it, then you got to figure out your build out. Once you figure that out, if you figure it out, most people don't perfect that, then you got to figure out, all right, what do we want to stock the cupboards with, and how do we want to manage our IT, and what do our systems need to look like? That is an incredible amount of friction. I mean, it's probably one of the most friction-oriented processes that a company has. And WeWork, there's none. I mean, it's a very
Dave, don't even come up. You're done.
Yeah, and look, that's the only reason I'm saying it is I think that they've provided the industry a really good example, and I think that they're going to provide you more than that as time goes on.
So I think so now you're getting the perspective from a tenant, right? Not an investor. This is him talking about his experience, and all these gentlemen have 10 to 30,000 feet in Class A assets. Jeff's in the Grace building, which is Kent's asset, right? So they've all been through this process, and that's their perspective, right? So, you know, on Monday, it's how do we rethink removing the friction out of our process? Because tenants think it sucks. It's not a surprise to us, but we probably don't focus on it enough.
Yeah, as long as I'm bitching. So why can I go on Zillow and see everything that's going on anywhere and be able to compare areas and cities and even see what rents are versus buying? And
yeah, Brandon, can you fix that from a product perspective, please?
We're working on it.
We've got some burpees in the room, which is good.
Yeah, no, well look, there's still an incredibly important role for brokers. I just think that the friction part of it needs to go away. And if I'm a broker, I don't want to do that crap anyway. I want to do the higher value.
I didn't find my house with a broker, but he negotiated the deal.
Totally. No, look, I'm not against brokers. I think they're like amazing. I just think that there's a bunch of stuff in the process that needs to go away. So you agree though, right?
Very much so.
Yeah.
Brand's a huge Redfin fan. Huge. He's a Redfin tattoo on his arm. All right, well, thank you guys so much for doing this. Appreciate it.